Welcome to ForexTV.com. It's Wednesday, December 19th. I'm Remy Hokie for New York Forex Market Buzz. In New York afternoon trade, euro dollar is trading around 1.4355 as of 1:25 p.m. Eastern Time. Sterling dollar is at 1.9960, while dollar yen is trading around the 113.30 level. Sterling has weakened against the major currencies following the release of the latest BOE minutes. And also, Richmond Fed President Jeffrey Lacker says policy setting in 08 will be difficult for the Fed Reserve. Joining me this afternoon is Rhonda Staskow from Thomson Financial. Good afternoon, Rhonda.
Good afternoon.
Thanks for joining us today. Well, first and foremost, sterling has fallen below the $2 handle for the first time in 3 months, and the British currency saw a session low against the dollar at 1.9927. But with the BOE minutes showing that all 9 MPC members voted in favor of a cut, and given the latest UK fundamentals, there's speculation of more cuts. So do you expect to see lower levels for sterling dollar in the near term?
I certainly think we will. There's been signs that a lot of, let's say, speculative plays or investment plays in high-yield currencies like sterling, Aussie, and Kiwi have come under steady pressure each day this week, and so that alone is keeping pressure on sterling. But, of course, after the minutes that you mentioned and the unanimous vote for a rate cut, new forecasts have come for a rate cut for the January meeting on January 10th for the Bank of England, which, of course, would see rates go another 25 points lower to 5.25. So I think that's to be expected, particularly after data this week showing that London housing had dropped almost 7% in 1 month alone.
Well, Rhonda, while we're still on the topic of the sterling, we saw currency fall to a multi-day low against the yen and a 1-week low against the euro. And meanwhile, dollar yen has come off morning highs. But given that we've seen a decoupling of dollar yen and the yen against euro and sterling, what do traders and investors need to keep in mind from a fundamental perspective?
Well, from a fundamental perspective, the markets tend to ignoring the fact right now that Japan is likely to keep rates at very low record levels for months to come, and that growth is slowing in Japan. That's not being watched. The use of yen, of course, as a carry trade is really the focus right now, particularly with financial markets still volatile, and with Lacker warning just a few minutes ago, of course, that any new news could cause more volatility. So risk aversion is the story, and yen crosses continue to be under pressure today, with stocks coming under selling pressure after some of the S&P downgrades announced on bond insurers today. So I think that will continue to be the story, and though dollar yen could possibly go higher towards 115, the yen cross-selling story will continue to keep euro yen, Aussie yen, Kiwi yen, and sterling yen under pressure and hamper any dollar yen gains.
Okay, and turning our focus over to euro dollar, which we haven't covered yet, the pair hit a session low of 1.4326. But given year-end position squaring, if you could give us your levels of support and resistance for euro dollar.
Well, I think 145 figure 30 will be important resistance now on a psychological basis, and because there were big options at that level on the move down just recently. And I think downside support and downside targets are at 142.70 and 141.80. And I think there's still more risk for the euro to go lower due to the credit crunch and expectations, particularly after the weak IFO number in Germany today, that the global market volatility will still impact Europe.
Okay, and before we wrap it up, if we could take a look at the Canadian currency, dollar CAD is currently around 1.0055 in afternoon trade, but with the loonie hitting the 100-day moving average at 1.0065, from a technical as well as a fundamental perspective, what's your forecast for dollar CAD?
Well, I think we've probably seen a bottom on the dollar CAD. The CAD is certainly benefiting from some renewed dollar strength, but overall, I see the dollar CAD going higher, targeting the 105-106 area in months to come. What's seen helping it is IMF today supporting the recent Bank of Canada rate cuts and also saying that under one, the Canada had been overvalued. Certainly there are some banks now calling for as much as 3 more rate cuts by the Bank of Canada on expectations of a slowdown as the impact from the stronger currency still affects the market over coming months. A couple other things I'd look at, too. One is the fact that commodities have been under pressure with base metals sliding since August on slower growth expectations. That will continue to be a negative for Canada. Also, the M&A inflows peaked earlier this year at a net inflow of $88 billion into Canada. That's dropped significantly, and in fact, the pipeline is said to be negative for Canada that will remove some of the support we saw this year.
Okay, Rhonda, as always, thank you very much for insight and analysis into the Forex marketplace. That wraps it up for your Forex Market Buzz with Rhonda Staskow from Thomson Financial. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.